Good evening. Welcome to the ShadowTrader video weekly for Sunday, August 26th, 2018. Slight breakout here to new all-time highs on the SPX after a small 3-day balance. And market profile definitely gave us a lot of clues that this sort of balancing to the downside would probably lead to higher prices, at the very least a retest of this prior all-time high, which we parked ourselves right up against. I'm going to get to the profile in a second, show you some fascinating nuances. For now, however, the S&P is still just actively moving inside of this channel, and that channel, as you can see, is narrowing. In the bigger picture, that's a bearish signal. You can see it clearer on a weekly chart, that ascending wedge like that up into that triangle. But obviously, because there's still plenty of room between where we are and the upper end of the channel, and certainly even more room between where we are and the sort of apex of the channel there, that part where the two lines cross, there's really nothing to worry about just yet. So in looking at the market profile, what I was alluding to before in terms of the nuances that were here, very, very interesting in terms of giving us signals that the sellers here were really getting themselves in trouble. And I'll just point out a couple of things. And as I get deeper and deeper into the profile, which I've been a student of for so long, I'm getting more and more confident with looking at the different nuances and understanding what they're going to mean and their predictive power. And one of the things that was really in focus this week is this concept of poor highs versus weak highs. So this high here is poor because it only has one tick of excess, and this high here is poor as well because it only has one tick of excess. But this high here is also a weak high, and the reason it's a weak high is because it is the same level at the prior all-time high, right at that 28.73.74. Obviously, give or take a tick, it's not perfect, but because this high is at a prior very mechanical visual reference point, it is known as a weak high. And obviously you can't see it here on the chart because it's from January of this year, so it's actually way back here, and the profile data doesn't at least the way I have it set up, doesn't go back that far. So keep that in mind. Whenever a market moves off of an area that's very visual and very mechanical that everybody can see, you can think of it as like an obvious area. A double top is a classic example of that. Those are generally weak highs that will be retested again and probably go higher. And I'm going to show you a trade idea towards the end of this video that actually plays on this concept. Notice that here, earlier in the week, again, where is this high? Right where the fattest part of the profile is, right in the TPO point of control area. Right? This high also just goes a little bit higher than this high and comes in. So these highs are weak in that their sellers are starting at these very visual mechanical references. And then even as the market comes down, what does value look like? Value's overlapping to lower, right? A market that's actually going down has value breaking away to the downside. This market's not really going down. And then you make a poor low. It's not a weak low, it's not at any sort of visual reference, but it's a poor low because it only has one tick of excess, and the classic 45-degree line as well, which tells you that the next day, or at least the overnight session, but in this case it was the overnight session and the next day, would be higher. And where does the market go? Wants to go right back to where the weak high was before, also a poor high which needs repair, and repair it. So that's what's going on in the profile. So a lot of beautiful, interesting signals there. I do want to remind everybody that if this sort of analysis holds any weight for you, or you're interested in learning it yourself, this weekend is the last chance to get the James Dalton courses at a discount. So if you're on our site, just mouse over Futures Market Profile and you'll see course 1 and 2 and the bundle are here. So there's a pretty deep discount just until midnight on Saturday. So I'm putting this video out on Friday night, so I have plenty of time to digest that. All right, let's get back into the markets here. So from a technical basis, we have this wedge forming, as I was saying. One of the things that I think keeps the rally going a little bit longer is the classic out of syncness of the market. We've talked about this for a while. We have seen NDX on some days lagging as FANG has been kind of stuck a little bit, but notice what's happening here in the NASDAQ 100 now. 1, 2, 3 touches plus a bullish pattern like this, which is a higher low. And I think that's probably going to take NASDAQ 100 stocks at least up to here, right, up to the top of its channel. So we could go about to the high 7,700s. And if we look on the weekly chart of the NDX, that does make sense. We've got some room to maneuver. And this is where I would start to be thinking that the market could pull back, with FANG stocks not having a catalyst of earnings, and then they come up to this area here. I would watch for this very closely to be possibly not necessarily a top in the whole market, but at least a possible top in the NASDAQ. All right. All right, let's get into a few ideas. Pretty much all of them in the bullish camp, because that's what we're seeing in the markets here. But very nice consolidation in RHI, which is Robert Half International. This is an IBD 50 name, so very highly rated. And looks to me like it's just flattening out here in this tight pattern and just breaking the downtrend line. But for some reason hasn't really gotten in gear yet at all. Could just need more consolidation. But the beauty of it is that because this little box area is so tight, you've got a very, very tight stop, you know, where the trade doesn't really make sense, I think, if it takes out that low, which is really only like $1 away. So Romeo Hotel India is a pretty solid idea. Amazon is another one. It's just been kind of consolidating. Have an alert set here for 1916. I'll just erase that. And notice that what I wanted to show you is on the hourly chart, it feels like the chart, like the stock just wants to retest the 1900 area, possibly. And I'll remove some of these that are not correct. But if you look at the uptrend line currently from this low, it actually ties right in with the 1900 level. And obviously stock was showing some relative weakness on Friday. I do have some long positions in the stock, so that did cause me to trim them down a little. But what I think is really happening in Amazon is it just wants to resolve this level. So you've got some sellers here, very minor pullback, retest, right? And this is another perfect example of what I would call a weak high, because it's at a very mechanical reference. You have mechanical sellers, and if this here comes into a higher low, as you can see, this keeps going, then what's going to happen is you're going to retest here, and once you break this low 1920s area, it's kind of an area in this stock because it's so expensive. It's that prior high is 1925, but we've had some tests of like 21, 22, etc. Once we move to that area again, then you have a strong buy for a push up to about probably 1950. Okay, that's Amazon. Now, other examples of that sort of poor high dynamic. I'm looking at Goldman Sachs here. Look at this. Also very visual mechanical selling at the same level. Obviously some sellers just around the 240 level, but multiple touches of that area. And we've got this happening, and I think what happens is we probably bottom out somewhere in here between 230 and 235, and then it's a retest of that area, and that would be the fourth touch and probably moves a bit higher. So that's Goldman Sachs. Gulf Sierra. Booking.com is actually a similar pattern to Goldman Sachs, I think. I kind of look at these as the same thing, even though their businesses are completely unrelated. But usually we look for a break into the gap at this 1955 level on up to 2000. That would be a trade. But I'd like to get ahead of it and actually look for this pullback to end somewhere and an uptrend to resume and be targeting the 1955, probably with a very wide butterfly structure, using that 55 as the mid strike. And then last but not least, I'll show you this Sherwin-Williams, which has a very bullish type of pattern here, almost like an inverted head and shoulders, with this low being lower and a trend line here. The stock is a bit overextended on the longer term time frame, but you can't argue with these double weekly hammers here. Usually those lead to a little bit of a push higher, so that's an idea you might be interested in as well for next week. All right, just to recap, remember it is only about 24 hours left, depending on when you're seeing this video, to take advantage of the discount on the Mind Over Markets courses in Market Profile. This stuff is very, very powerful, as I've shown, and I highly recommend that people get deeper into it. These are very, very comprehensive classes, so to speak. They last an entire month, and it's pretty much Jim teaching in a live market environment for the entire morning session, usually of every day in the month. Plus, there's a lot of write-ups you get. He sends out reports at night, kind of like my blog on steroids. So there's a lot going on. So the first one is starting on October 2nd. And again, you would just go to shadowtrader.net, mouse over futures market profile, and the courses are right here. Discounts are available until midnight on Saturday. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and